A little bit better and then a little bit of a fall again towards the end.
James, not a very good day for the Australian share market. We were down by 1%, but it was encouraging to see that we did see a revival back over 5,000 point marks. The 5,000 point mark early on in the session. You can see that we saw this very steep dip, and that dip was quite significant as well, because if we move over and have a look at the 30-day chart, you can see what we've gone to test the support level that we saw a couple of sessions before at 4,975 points, and that managed to hold on today's session. The low that we saw was at 4,978 points. Having said that, having a look at the market map, and it was very hard to find any green on screen. In fact, having a look at the top 20 stocks today, and we only saw two stocks actually gaining ground. That was Newcrest and Santos. And if we go to the top 50, it gets even worse. We only saw four stocks gaining ground. That was Newcrest, Santos, as well as Leighton's and another stock as well. So really selling all across the board. Of course, earnings was very much in focus as well. But even the earnings results that we saw, we did see a downward bias in terms of stock movements. There was a good performance from Austral, that was up by 4.1%, as well as Ramsay Health Care, which was up by 1.1%. But outside of these two, we saw pretty anemic or very negative share price performances. We saw Virgin Group down by 5.8%. We also saw AWE falling by 4%. We saw Atlas down by 3.4%. We also saw QBE Insurance down by 2.2%, Cube Logistics down by 2.7%, and Flight Centre down by 2.5%. These are all stocks which came out results today. So really a downward bias from the impact of earnings season today. The market down by 1%, but staying above that 5,000 point.
Well, it seems once again the focus Europe have got these Italian elections, and I suppose up in the air as to what we're likely to get, and if not, do they have to go back to the polls? I mean, do you see that continuing to act as a destabiliser? We certainly saw it on that US session overnight.
Well, we know that markets don't like uncertainty, and now we have more uncertainty over in Europe because of those Italian elections. It looks like we will probably see a second Italian election within a number of months. So the uncertainty and also the rejection of austerity that we saw from Italian voters overnight is of a concern. So we did see risk assets being sold off, but of course, on the other hand, we saw safe havens being bought, and gold's at a very important level at the moment. We have a look at gold over in New York. That was up by 0.9%. And on our market today, the gold miners were one of the areas which actually saw gains. We saw Newcrest up by 1.9%. We just have a look at the 5-year chart of gold at the moment. This is what it looks like. And you can see that recently what we have been seeing is an important test of this technical support level. Now, if we do see a bounce off gold in the coming weeks, that would be a very positive sign, and we'll probably move to the upper end of the range around the 1,800 US an ounce mark. But if we do see a break of the current support levels and more weakness, then we could see another tumble for gold prices. So gold at an important juncture. One of the things we are watching very carefully is the Federal Reserve, and that's because gold has a very high correlation to the Federal Reserve's balance sheet. In fact, a correlation of more than 0.9. We know that at the moment the Fed's still buying $85 billion worth of bonds per month, but what has seen a bit of weakness in gold is some talk that we could see that $85 billion either winding back or coming to a close. And so Ben Bernanke's speech tonight to Congress is going to be an important one. We're going to be watching his speech over the next 2 days for any clues on what may be happening in terms of quantitative easing, and whether quantitative easing unlimited turns out to be more of a limited QE than the market expects. So gold at an important juncture, but unfortunately more worries about Italy. Not good news for risk assets today.
My report card's out today. Julia, one of those very much QBE, also confirmation some 700 jobs go over their global operations. But I wanted to get your thoughts more on the health of this stock. Going back late last year, they lost the confidence to some degree of the market, some downgrades, a bit of a cut to their dividend. Your thoughts on today's announcement and the outlook for this stock?
Well, once again, we saw a pretty weak announcement coming through, and it does look like their business in the US is still struggling. The stock down by 2.2%. Their full-year result coming in below expectations. We did see a rise of 6% in the full-year net profit at just over $760 million, but that was far from consensus, which stood at about $880 million. Not only that, it does look like we are going to see an extreme reliance on cost cutting. We were expecting to see about $200 million per year worth of cost cuts. Now we're going to see $250 million a year. So that's a positive sign. But QBE really battening down the hatches. It's going to be paying out less of its profit as a dividend as well. So the payout ratio coming back from about 70% to 50%. But really what we want to see here is a turnaround in some of its key businesses, especially the US business. And unfortunately, on the back of that weakness that we have seen in its US business, we've seen a cut to guidance as well. So QBE shares down by 2.2%. We want to see that turnaround in its US business.